Hello everyone, welcome back to the channel. This is technically like one of our first few videos talking about, I guess the stock market. I've always been looking into the stock market a lot. Always been kind of into business, doing things like business analysis and looking at income statements, balance sheets, cash flow statements, things like that. So I think for these first few videos, I just kind of want to talk about how I value stocks. And you know what? Okay, let's see. So these are actually the ticker symbols of some of the stocks I was going to go over today. But first, or I guess we might not even go over these today. But these are just examples of ticker symbols for companies. These are the ticker symbols for, I want to say, the first 10 stocks in the technology sector. I'm not even sure what companies they are. In fact, we'll save this for another video. We aren't going to go over that today. First, one thing I do want to talk about is market cap. So market cap is important for me because it's kind of how I value, it's kind of like the metric I use to value like very big companies that are worth like billions of dollars or millions of like just very big companies. I guess some people call them like large cap. I guess there's large cap, small cap, mid cap. I don't really pay attention to that too much. But market cap is essentially outstanding or total shares times the share price. I want to say market cap. Yeah, I want to. Okay, so if there was, say, 1 million shares of a company like, I don't know, XYZ, and the price of each share was $35, market cap would just be those multiplied by each other. So 35 million. So that's kind of the first, I guess you could say, metric I look at. And that just kind of gives me like an overall idea of what the market believes the company is worth. So let's say 35. Okay, let's say this. Okay, so company XYZ is trading at, okay, yeah, so, okay, so company XYZ is trading at a market capitalization of 35 million. So after I look at that number, I look at a few other things. The most important ones that I look at right away is, first I look at their income statement. Let's see. Shout out to Microsoft Word for helping me explain this. Okay. Income statement. And that kind of shows me their total revenue. And then it also shows me their net profit. And I like to look at it for like a lot of years, like around like 10 years. It depends on what I can find. But you can find a lot of the stuff in like 10Ks, which are like annual reports the company gives out talking about the earnings and everything. So look at the income statement. I look at the net profit. And then from there, I kind of consider, then after that I look at their balance sheet. And their balance sheet tells me their asset to debt ratio. Asset to debt ratio. And that kind of gives me an idea of how much leverage the company has over their debt. So if the company has too much debt, I generally do not like to invest in companies like that. Also, I guess owner's equity. I think, okay, so I need to touch up on a lot of these concepts, so I don't want to say anything wrong. In fact, it's possible that the market capitalization valuation I gave is not 100%, but I know it's at least 90% there. I mean, that's essentially what market cap is. But yeah, this video's just kind of been on the fly, I guess. I just wanted to go over a few things I look at when evaluating stocks, or I guess businesses. They're businesses. You don't want to look at them necessarily as stocks. You want to look at the individual business. You want to see what the business does, how it's ran, and before you invest, I guess it kind of depends on how you want to do it. But generally, you want to invest for the long term. So you don't want to. I know a lot of day traders like to invest in companies that, or I wouldn't even call it investment. They like to buy stocks. Day traders buy stocks. So that's why I actually want to be careful of using the term buying stocks. I want to think of it as buying businesses. Day traders, or I guess people that try to like read the market based on like the trend line or that kind of thing. Generally, that's not a good way to do it. In fact, I don't even know how to do it that way. And in my opinion, that just seems to be a way to lose money. I don't know. I've never made money doing that. But when I do investments, I like to think of the long term. I like to think about the actual company itself. What is the company doing? What is the company's vision? Where does it want to go? What's its objectives? And then once I look at those things, I also look at the kind of like the numbers. And that's when I also look at like the income statement, the balance sheet, the cash flow statement. And that kind of tells me how the company is, if the company's profitable basically, and if it's run very well. So, I think that'll be it for today's video. Whoa. Excuse me. That'll be it for today's video. Stay tuned for the next video. Yeah, stay tuned. I'll see you later. Peace.